Over the course of the next hour or so, I'm going to be going through the various sources of finance that are available to entrepreneurial companies, all the way from startup companies to companies that are looking to expand their operations. And entrepreneurial finance is basically the funding escalator from seed capital all the way through to venture capital. And then later on, of course, for more established businesses, you would have private equity as well coming in. So today I'm going to cover the sources of finance available for entrepreneurial companies, startup companies, and so on. And we'll have a look at particularly business angel financing coming from high net worth individuals, crowdfunding, venture capital coming from those institutions that specialize in funding startup enterprises and high growth enterprises. We'll have a look at some of the tax efficient schemes like VCTs, the EIS and the SEIS scheme briefly, and I'll also cover corporate venture capital as well. So, as I'm going through all of this, I will also be touching on some of the trends that have been happening in the entrepreneurial finance space as well. And we'll conclude by having a look at some of the top tips that entrepreneurs that you may be advising as lawyers or accountants might wish to know in terms of how they might pitch their business plans and proposals to these various sources of finance. And if an entrepreneur is looking to attract angel capital, they're going to need not only a business plan setting out the proposition very carefully, but they're also going to need some evidence that there is some traction in the business, ideally, in terms of some revenues already, ideally. But if that's not possible, at least some information from customers that they actually want to buy the product or service that their company is producing and coming up with. As I've said, they may well invest in groups, in syndicates, and they may decide to invest in particular sectors. It's quite common for angels to only invest in the sectors which they obviously are familiar with. For instance, they may well be investing in technology startups, whether it's IT or life sciences type business. And they will usually want some sort of hands-on role in the company, whether it's as a non-executive director sitting on the board, or maybe as an advisor consultant to the company in some way, unless they're a pure financial return angel, in which case, if they are that type of angel, they would just sit back with a hands-off approach, having made their investment.